Ladies and gentlemen, the fourth panel discussion is about to begin now, and the topic is strengthening non-financial risk management. May I invite on stage the panel of speakers for the session. Mr. Radha Krishna B., CFE, CFCS Director, Customer Advisory, SAS Institute Private Limited. Mr. Sameer Ratorikar, Executive Vice President and CISO, HDFC Bank. Mr. Atul Kumar Singh, CISO, Bank of Maharashtra. Mr. Binod Singh, CEO, Cross Identity. Mr. Amol Bhatt, Partner, Advisory, Risk Consulting, PwC. Mr. K. Ramkrishnan, Head FSI Solution Architect, AWS. And our moderator for this session, Ms. Anke Rofus, Partner, McKinsey & Company. Yeah, please start. Over to you, Anke. And we have a hard stop at 45 minutes. Yeah, please, all the best.
Wonderful. Thank you very much for having us and being excited about non-financial risk. At least I'm very excited about it. When I started looking at non-financial risk, actually they were still called op risk back in the days, and they were quite simple. You were basically only counting losses. A global bank had basically 6 people watching after them. And in today's world, non-financial risk is a whole emporium and really, very diverse to manage. I'm very excited to have this panel here and speak a little bit about how to strengthen non-financial risk management. And we'll start by thinking a little bit about it. What is it? What are some of the biggest non-financial risks? And I would like to ask or start with Mr. Ratorikar. We have the digital transformation, we have the regulators, we have quite a lot of circumstances that drive non-financial risks. Which trends are you seeing? What risks do you face in your bank? And also, how are you addressing them?
You can pass on that.
Thank you, Anki, for the good introduction. Good afternoon, ladies and gentlemen. See, the way to sort of think about this question is still few years back, maybe a decades back, we were living in a perimeterized world, right? There is a fixed perimeter, there is to be a data center, okay, the applications, and then you know what risk exactly we are expected to manage. What has changed in the last 1 decade, especially after the COVID, is it is becoming a perimeterless world now. It's a world of being digital with all API ecosystem, driving the innovations, driving the perimeterless strategy for the organizations. So there is no fixed perimeter, okay? The user, the devices, the identity, it's all become sort of a perimeter right now. Having said that, obviously the threat landscape is evolved rapidly, okay? The attack used to be primarily driven by the viruses and malware. Today has taken a shape of the ransomwares, which are more targeted, more sophisticated, more innovative. We keep hearing about a fileless malware. Even there is no need of a disk, right? So there is no practically use of antivirus to sort of detect and hit it. I think that's the innovation in the threat landscape from the IT infrastructure perspective. On the customer side, social engineering, it's still a problem. It was a problem for the last 2 decades, at least I'm seeing. Today, the problem is continued, but definitely evolved. I think the SIM cloning with UPI becoming a major payment application, a lot of UPI-related frauds are happening. Primarily phishing and then vishing, you know. So social engineering predominantly is rampant, okay? The third aspect is also cloud. because the moment we talk about the API, I think the cloud is, to my mind, is the other side of the coin, right? Because it's all about the scalability, agility, and the people want to be rapidly make the digital transformation possible, right? So cloud-related threats, the misconfigurations, and the data leakage because of misconfiguration. So I think if you see primarily, the whole two concepts of banking, securing the bank and securing the transactions. So there is an evolution in both these areas, okay? And that's a change we are observing right now. From the countermeasure perspective, of course, there is an evolution, right? There is a great evolution. I would say a lot of innovative companies have come up to handle this problem. One is on the IT infrastructure side, one is on the customer transaction security side. And that's the way to look at it. Basis our risk management framework and our risk appetite, I think one has to look to this particular problem and address it. Is the solutions available? Yes. Is the silver bullet? The answer is no. I think it needs to be a multi-pronged approach, or we fundamentally talk about the defense in depth. That concept is still valid, right? And to my mind, that will also be valid in the days to come, right? Because we cannot rely on one solution or one policy framework to address all your problems. Thank you.
Right.
Thank you. And Mr. Singh,
Yep.
Does that resonate? What trends are you seeing in terms of non-financial risks?
Right. I think just to take the Samir sir's point of view forward, the things that have been evaluating, at least in the banking sector, are on the same lines. The threats that were more from the perimeter side, as a DDoS solutions, as a WAF, as a firewall issues, have now been curtailed in terms of digital transactions. So that was the reason wherein the Reserve Bank of India, with its circular called Digital Payment Security Controls, came, because banks were also supposed to have the necessary controls in terms of the digital payments. So from perimeter to the digital have been the journey, I would say, since last 15 years. As of now, if you ask me, it has much evolved beyond the digital payments to the digital ecosystems. So the trend right now, what we see in the ecosystem is more from the third-party apps, more from the digital payments to which are not directly owned by the so-called individual bank entities. Still the frauds or the digital frauds or the cyber threats are happening. So trend is quite visible to us. It's going from perimeter to the digital payments to the digital payment ecosystem. That was the spirit why the Reserve Bank of India again came out with the third-party security controls or the outsourcing policies. And that is on the rise. That is the first point I would like to submit with respect to the trends. Another very, very interesting point, I think, in terms of the audience, I would also like to throw my point of view is, when we are saying the cyber frauds, it's quite a buzzword as of now. Why I'm saying buzzword? The treatment that we are giving to the cyber fraud remains the same. We need to bifurcate, as rightly mentioned in some of the documents by RBI in terms of the draft circulars, are a cyber-enabled and a cyber-dependent frauds. It's a very, very, at least I was enlightened by going through those specific documents, wherein we need to understand what is the difference between a cyber-enabled fraud and a cyber-dependent frauds. Because bank's point of view will be different in order to cater those controls. I will just give an example so that at least it is clear for the audience in terms of have a better understanding. If at all there is an APK which is fraudulent or malicious, and the customer clicks, it's a cyber-dependent fraud, because somehow the system or the processes are faltered, or there are gaps in the process. Second example could be a collect request, wherein certain UPI-related issues are quite well known in the ecosystem. Third could be a phishing attack. Fourth could be a certain compromises in the banking system or the third-party systems, wherein certain processes or certain gaps in the systems are there. We need to see from a cyber-dependent frauds, and the banks and the ecosystem needs to further streamline those. Second, as of now, in terms of trend, which is moving is towards the cyber enablement frauds. For example, the digital alert cases, I think it's the very, very prominent cases that are being occurring as of now. The job scams cases. So we, in the security or the IT side, we have a so-called word called as non-repudiation, where the customer cannot say they have not done. So in the cases of cyber enabled frauds, the customer accepts that he has done a particular transaction. And in that case, if at all it is gone to a certain, I would say, fraudulent activity, it still remains a fraud. Though the authentication, the authorization, the risk management, all things are in place, but it does not give a right to the fraudster to do such a type of activity. So just to refer this circular, I think with June 2025, there is going to be a change in terms of the cyber security incident reporting to the RBI, and banks are supposed to work on those lines. So we also need to give a different treatment in terms of cyber dependent and cyber enablement of fraud, so that we do a different perspective of target oriented protection controls in place. And there would be naturally a different limitation when we are looking into from the point of cyber enablement frauds, because it's more of the awareness, it's more about going to the people, telling them how we can protect those things vis-a-vis the system oriented controls. So there has been, and just to answer the trend, there has been a rapid increase in terms of movement to the investment scams. That's more from the cyber enablement frauds, because it's no longer the jurisdiction directly of the banking system, but since the account is there, banks are the party to it, and we need to improve further. That's the basic point of view.
Thank you. We've talked about external threats, and it's always easy to finger point to the hackers and the fraudsters out there, but how do we think about insider risks? So how do we think about threats that come from the inside, whether it's employee-led fraud or negligence? How do we address those, Mr. Bhatt?
No, thanks. So I think the previous two panelists talk about the technology, cyber, and associated risk. But when we talk about non-financial risks, I think anything other than credit, market, interest rate risk would qualify as a non-financial risk. But again, in non-financial risk, there are two dimensions. One dimension is employees getting kickbacks. There's no impact to the business, but there is certainly a misrepresentation, fraud, or something of similar nature happening. And the second is, it's more about what's happening internally from a compliance, from a conduct, from a lot of things that are not directly relatable to financial risk. Now, one part is in financial risk. Let's say an account becomes NP, it becomes very evident. Let's say there is a loss of value of investment, it's very, very, very evident. But in a non-financial risk, it takes a lot of time for something to get identified, because there's no direct correlation of saying, hey, look, this is why something went wrong. So as far as controls are concerned, the traditional controls, the management controls, everything that's done in terms of self-assessment, in terms of technology automations, those are great stories. But when we do analysis, or when we do all of these insider risk related work, I think one of the things that we see that works best is largely the whistleblower programs in institutions. And one of the areas, or one of the key words that we use is predication. So when you know that something is wrong, it's easier to find out. But otherwise, you're just doing like boiling the ocean kind of a work. So just to put in perspective, we believe if you really are addressing non-financial risk from an internal risk perspective, especially about employee frauds, anything from kickbacks perspective, I think whistleblower programs work the best. But of course, the self-assessment, compliance-driven testing, and of course the line 3 really work well together. So all in all, non-financial risk, it's a little bit difficult to quantify. The color of risk takes a very long time to kind of emerge. But essentially, some of these controls that are talked about work really well from a banking and a FS standpoint, if I may say so.
Thinking about how can we actually get our digital banking ecosystem, how can we make it secure? And Mr. Radhakrishna, RK, we spoke about authorization and authentication processes. So how are banks evolving those, and how can we keep the security, but also make it seamless in terms of customer experience?
Good afternoon, everyone. So authentication primarily refers to identifying the user or user ID by virtue of something the user knows, the user has, or something what user is or are. And the authorization is fundamentally about what kind of resources the user has to verify the transaction. But just to understand the payment ecosystem, what we went through in last 10 years, I picked up some numbers. We had roughly around 172 billion transactions, UPI transactions in 2024, and 441 million transactions on IMPS, just stating two transaction types, payment transaction types. And you can imagine the number of entities that come along with that. It could be number of customers, accounts, user IDs, number of sessions, locations, IP addresses, wherever possible, right? Now, banks have deployed range of controls. It could be two-factor authentication, multi-factor authentication, Aadhaar-based authentication, risk-based or adaptive authentication. What I've also seen is that some banks have deployed what we call it as specific devices will be used by the customers. And of course, a lot of time is spent on customer education. While we have these controls, we also need to acknowledge that we need to balance between these controls and the customer experience by fundamentally exploiting the data, both historical data relating to customer accounts, transactions, sessions, and so on, by using analytics, or what we call these days as AI/ML. SAS recommends fundamentally two broad combination of two approaches. One is multi-level monitoring, and second is hybrid approach, fundamentally to reduce the false positives, right? Once we reduce the false positives, the number of interventions, clarifications, confirmations, what customer has to do will definitely minimize. Now, just to expand of what is this multi-level monitoring, we talk about monitoring transactions, we talk about monitoring entities. Entities in this context could be a customer account, or it could be a user ID, or it could be IP address wherever possible. The hybrid approach fundamentally refers to using combination of business rules for known frauds, anomaly detection for unknown frauds, and predictive risk scoring models for emerging frauds. And the last one is the network analytics, where we have to deal with scams. So to just summarize, there are frameworks available where banks are deploying, fundamentally to balance between security and customer experience. Thank you.
Thank you. And it is a lot of the risk management that we'll have to do around our digital channels, around our digital ecosystem, is around identity and access management, as you mentioned. And I would like to ask Mr. Singh, so how are banks leveraging, Mr. Binod Singh, how are banks leveraging identity access management solutions to mitigate cyber risk and to make us safer?
Well, earlier during the day, I did talk about Indian banks being in a fairly nascent stage of the implementation of identity and access. One of the fundamental issues that I'd like you to think about is that in our industries, the problems come first and the technology follows to solve the problem. The question is, what is the difference in the timelines and the sophistication of the solution that comes to solve a particular problem? IAM is a very good example of this huge time lag between the problem and the solution. Unfortunately, all the technologies, the way they develop in silos. And that's what has happened in IAM over the years. I remember 24 years ago when IAM appeared, the user management was the first area. And then the need for access governance was felt, and that came in as a response to that. And then came the access management and so on and so forth. But there are two fundamental issues here. One, these technologies came in response to specific problems. And two, and therefore they did not develop beyond the solution. But more important was that these did not come as a holistic solution. And that's where today the industry is struggling, or the customers are struggling, banks are struggling, I know of banks in America which has got 16 identity and access management solutions to solve different problems. And that kind of point approach is literally suicidal. Gartner talks about convergence. It's been 3 years Gartner has been talking about convergence of identity and access management solution. But beyond a handful of 1 or 2 companies, nobody else is able to reach there. Now, that's one issue. The second issue is that the whole approach to the solution, technology solution itself, has to undergo change over a period of time. If you look at fundamental issues earlier, there are different modules came in within identity and access. Today, the issue is not to solve the basic problems, but to how do you mitigate risk? Any IAM solution that needs to come in has to fundamentally work towards mitigating risk rather than providing a bunch of technologies. And that is still not happening. There's some people who are working on that, but then I see most of the cybersecurity IAM vendors also included are driven more by marketability of their solution rather than solving the issues. That fundamental issue needs to get sorted out to some extent before we can really have the solution.
Thank you. I would like to shift gears a little bit and think about what are the developments across the entire financial ecosystem. And I love it that we basically have that entire financial ecosystem here represented in the panel. We have banks representative, technology providers, advisors. Question to Mr. Ramakrishnan. How important is collaboration? So how good do all of us need to work together to combat non-financial risk?
I think, first of all, good afternoon, everyone. I think collaboration is the fundamental foundation block. And I say that primarily because of our country. The scale, the diversity, and the kind of problem that we are seeing is very unique. It is not something that has been seen or heard before. Some of them would be seen and heard before, but it's not that all of them have been seen and heard before anywhere else. So many times what happens is, these partnerships that we have within the ecosystem, that actually goes a long way to ensure that everyone who is part of the ecosystem is learning from each other and ensuring that we don't repeat the same mistakes, right, that others have kind of gone through. It happens in I would say, some forums like these, which are a little more organized, but there is also a good amount of backroom conversations that happen between friends, between colleagues, between participants within the ecosystem to ensure that we do avoid the pitfalls that have been seen by others, right? I just want to bring in a perspective that is very unique to Amazon. What we believe is that we believe that mechanisms actually go a very long way in establishing and doing something meticulously and in a repeatable fashion, right? So what we have done over a period of time is that we have tried to see how we can get the participants within the ecosystem together. And these are through various forums, but what we do is we also try to get enterprises and fintechs together. Why? Primarily because there are some things that the fintechs have done very well, they know and they understand that well. As compared to that, enterprises do certain things very beautifully. They've been doing certain things, especially when it comes to compliance, let's say for the last 15, 20, 25 years. And they understand that space so well that there is quite a bit that fintechs can learn from them. But when it comes to agility, the fintechs do that very well. They do it very beautifully. They've kind of done that because of a bunch of constraints they had, and they can actually help the other participants within the ecosystem to learn from that, right? So a combination of these peer connects is what kind of helps. Collaboration, I would say, is super critical. It makes everyone's life easy. We have the same misery, so the moment we kind of unite in the misery, we are able to kind of solve that misery for all of us, right? So that's my belief. Thank you.
Thank you. And I loved in our pre-discussion how you said misery brings people together. So it's a good precondition for collaboration, that we're fighting the same problems, all of us. Maybe a question to Mr. Atul Singh. Governments, regulators, policymakers, and I'm sure some are in the room, they are taking proactive steps to strengthen risk management frameworks. And what are some of the key initiatives and what opportunities do those collaborations bring?
Sure. I think as a single liner, I would say all the banks, including us, are on toes to fulfill all those specific regulations and the risk frameworks. Just to quote 2 to 3 that are currently being happening, and not only financial regulator, even the related parties. For example, the one I would say major contribution in terms is from the MHA as a part of the I4C, Indian Cyber Coordination Center, that is nodal agency taking care of the cyber frauds. Again, just to correlate as one of the operational risk aspect. So just to quote few of those, I4C is one of the agency that is coordinating with the banks in terms of mitigating the cyber frauds and have a better TAT is the one of the example. Besides that, even few of our team members might be aware there is a Chakshu portal wherein any fraudulent, I would say, calls being received by the customers can be reported and its reaction can be done. So it also been taken care, and it's a single agencies as a SPOC, and the internal banks will fall in line as per the requirement. And just to add the try, I think they are doing a tremendous work in terms of the headers, SMS headers, in terms of they are using the blockchain technologies so that the end user is aware what is specific the header and what are the specific pathway is also being processed upon. In addition to this, recently SEBI, as one of the regulator for the investments, have also came out with a cybersecurity framework. So there are cohesive work going on between the regulator, between the respective state agencies, so as to just garner the entire cybersecurity issues. And again, I will come back to my previous point. All those things will add up to curtail the cyber-dependent frauds, so that the entire, if at all there is any loophole in the processes, the technologies, the customer is aware that this is a specific SMS header that I'm supposed to act upon if at all it comes from the bank, is one of the perfect example, when again the TRI has contributed to a lot. And to quote the specific task or what the contribution of Bank of Maharashtra has been doing, we were the first, among the first 2 banks that have been successfully integrated with I4C in terms of the API level integration, so that the real-time resolution of the complaints take place. That has been done recently from our bank side, and much more has to be further contributed. There is a negative list in terms of the accounts to which we are working internally in terms of having the controls in place in terms of the risk management is another example of thing. So the point of view that I'm right now stating is there are the number of regulations that are coming from the government agencies, from the various regulators, the other agencies like NPCI, like NCIPC, and all those collaborations we are importing in our system as a risk framework, and so that the transactions takes place in just to abide by those rules, and we act upon those specific indicative of compromises and other related things. And I think I'm very sure with all those curtailing the issues, the dependency on the stakeholders, and there will be a reduction in the cyber frauds. The only gray area on which we really need to work upon is only aspect wherein we need to aware the customer in terms of what needs to be clicked, what not to be clicked, and it is much beyond the tech aspect. I would say it's more on the cyber hygiene and the cyber culture that we need to build in the entire ecosystem.
Thank you. I want to take a look into the crystal ball now and see what's actually out there in the future. Question to Mr. Bhatt. So what are the most pressing challenges banks must prepare for in and around non-financial risk management? How can we make ourselves resilient? And operational resilient was one of the topics before, because that's, how can we future-proof our banks?
No, sure. So from a banking sector perspective, I think financial risk in terms of financial resilience is fairly well taken care of. I will talk about the other 3. I think as far as technology is concerned, tech resilience, I believe most of the banks have already kind of gotten onto this journey. the focus will only remain and gain more traction, because that's going to be the survivability of all tech programs going forward. As far as data is concerned, I think that's going to be the next large challenge, as far as the next vector that banks will have to very closely watch out. And I'm not trying to say it's because of privacy, but I think the consumer sentiments, the requirements of the customers are only going to be adding to more stress around how you manage data. As far as operations are concerned, I think the first part is the general compliance. And it's seemingly looks very difficult to get people to comply with even basic building blocks as far as compliance is concerned. So how do you nudge people, how do you nudge employees to really kind of get on to the whole compliance journey? That's the first, from an operations standpoint. The second, I think, is the conduct. It's a very gray line. It's very easy to say what is right, what is wrong, but there's a lot of gray. And how do you kind of conducively work with the very, very vast Gen Z and the very senior folks in an institution to really impress upon what's the conduct, how do they operate, and how do they build. And the last but not the least, the legal aspects. I think that's also getting complex. But with convergence, with identities, with all the other factors, I think there'll be a lot of focus. There'll be a lot of vigor and rigor in terms of how we legally manage a lot of challenges that we kind of go through. So essentially, I think the financial risk or the financial resilience was always well taken care of because of the regulatory mandates. But the rest of the areas, there's a lot to do across data, across tech, across people, across operations. And those will be one clicks that each of you will have to really do in the context of where you operate. The last thing that I'll say is there are a lot of solutions that talk about a lot of things of how to manage, but one thing that's missed is the context of the organization, and there's no one size fits all. So for a fintech, it's going to be very different. For an NBFC, it's going to be different. For a BC, it's going to be very different. For a bank, it's going to be very different. So the contextualization is also going to be very, very critical.
Thanks. We need to take a look at the time, so just a heads up for everyone. But Mr. Rajalikar, maybe a question to you to get started. The future means innovation, and how can we balance between driving innovation and being like a kid in the candy store and being excited about innovation, but also maintaining robust risk management practices? So how to balance?
All right, very tough question actually. Honestly, security is not a very great friend of innovation and customer experience. That's a fact. Having said that, the security which creates a trust from the customer's transaction security perspective and pulls more and more customer, at the same time, the customer experience is also one of the important pillars to enhance the trust. So I think both are same sides of the coin. And at the same time, it's very important to know that security cannot always be very friendly with the customer experience. From the user perspective, in an organization, still you can sensitize user, engage with them, engage with the business leaders, and make sure that they understand the security. And while the innovation and the customer experience, the user experience is still manageable. But when it comes to the customers, it's extremely difficult because you have varied range of customer. Some customer profile is as young as 20, 22 years to all the way to senior citizens of 70, 75 age, right? So managing this wide range of customer experience, I think it's extremely important. At the same time, this is one of the most important pillars to make sure that more and more customers are acquired, right? So how do you do that? So to my understanding, one example I would like to give you. Look, when a person carry out a net banking or mobile banking transactions, the two-factor authentication plays a very important role, okay? But is two-factor authentication at the time of login, at the time of transactions, is it all required, or maybe we can get rid of one and only have one? And the entire transactions will be managed or monitored in the backend. So there are some innovative thought processes which are coming up globally right now, that for a customer, whether he's working with on a net banking or on a mobile banking, or using your credit card on a POS or doing e-commerce transactions, the customer is same, the device is same. Okay, so make sure that you authenticate customers only once, right? But monitor his transaction, his risk profile throughout his journey. And whenever you feel that the risk parameters are changed, only then throw up the challenge response, as the two-factor authentication. So some of these innovative thought processes are building up in the industry now. Some organizations have done it. To a certain extent, we have also embarked on that journey. And that would actually make sure that while security aspect is taken care of, the customer experience is also enhanced, the user experience is also enhanced, and then you can strike actually a trade-off between the innovation, the security, and the customer experience. I think that's the future, and that's where even the organizations and the board of directors are also quite serious about it. Thank you.
Thank you. I would ask Mr. Atul Singh also to share his thoughts around balance between innovation and risk. Yeah. No, Mr. Binod. Yeah, sorry.
Can you repeat your question again?
What are your thoughts around how to strike the right balance between innovation and driving innovation, but also managing risks?
Sure. So I think especially technology innovation is fundamental to areas like risk management, because risk is changing rapidly. And if you don't have technology innovating itself, then there's no way you can catch up with the more and more recent risks that are getting created. I'll give you two examples. Myself and Samir have been talking about this. If you start looking at within identity and access related domain, you have not only the traditional identity and access modules that are there, but there is so much that goes on in terms of technology. A simple thing like KYC is also an identity and access management solution, because it fundamentally deals with that challenge. If you start counting the number of technologies, there will be more than 50 that are utilized by banks for this area of IAM, not just the 3-4 modules that we talk, loosely speaking, of IAM. Now, having said that, there's not been one single way to integrate all these into one seamless possibility that could give you a solution as desired by an organization, or for that matter, a department. The latest concept of identity fabric that is coming in, which is still a concept, some of us have been with a lot of zeal and enthusiasm developing solutions on that. And these are things that take years to develop. But as a concept, that is an innovation. And that is going to solve some fundamental issues of managing identity and access risk. I'll give you one very quick example, one more example. If you look at privileged accesses, all this while, PAM as a technology that developed, there it was presumed that the privileged users means the infrastructure users. That definition is old. Now, there are a lot of risky privileges are contained by application owners as well. And any privileged access that you talk about today has to unify both the infrastructure as well as the application risks. So there's got to be a technology, and we came out with one which is world's first privileged identity governance and administration solution, which sits on top of a privileged access management solution and offers the governance to both infrastructure as well as the users of the applications. So these kind of innovation, unless they keep on coming in, it'll be impossible to deal with the ever-changing face of risks.
Thank you very much. I'm terribly sorry for not hearing more about your thoughts on innovation versus risk management. Maybe just as a closing, I think if we don't innovate, we will be left behind. That's it. Thank you.
Hello, yeah, thank you so much, and sorry we had the hard stop. So, a big thank you to our panelists and moderator for their valuable insights and engaging discussion. May we request you for a group photograph, please, all of you. That's okay.
Thank you very much.